good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is holding on okay. We're below the mark of 18,600, but have been so throughout the trading session. Very flat and range-bound trading session coming in today. Having said that, this one space which is outperforming today is IT. So that entire pack is seeing quite a bit of buying action. And it's HCL Tech, Infosys, which is leading from the front. You also have mid-cap names like Coforge, L&T Tech, Infosys, which are doing quite a bit today in terms of the heavy lifting. So that entire space is doing quite well. The other heavyweight which is actually coming under pressure is Bank Nifty. Quite a bit of underperformance coming in from Bank Nifty, and it's the private big lenders which are down in the trading session. So whether it's HDFC Bank for that matter, or ICICI Bank, or even IndusInd Bank, all of those counters are coming under pressure. So that's the Nifty Bank showing you the underperformance. Outperformance yet again coming in from the broader markets. So the mid-cap index and the small-cap index is seeing quite a bit of traction, and names like real estate, metals, even auto names, select names like Motherson Sumi, Balakrishna Industries, etc., they are doing okay, but not a very buzzing or a very news-heavy day, Asha.
As has been all of last week. So it continues to be status quo, really, just hovering around that 18,664 print for the Nifty futures. Go Fashion, of course, has been active after that 11% equity changed hands earlier today. Remember, Sequoia is the likely seller, which was exiting about 10.2% stake in the company. CMS Info as well has seen quite a bit of block deal action. The promoter has offloaded stake, and we understand that Norges Bank, ADIA are likely buyers. SCI as well continues to hold a buzz. That stock is higher by about 2.5%. There is the divestment buzz once again that the government is likely to invite financial bids for privatization. Similar is the update coming in for Concor as well. It seems that the divestment is actually delayed indefinitely because of a lack of nod coming in from the ministry, which is why you're seeing Concor down about 1.7%. SCI, on the other hand, is holding up in the green. And then, of course, there's Coforge and Ujjivan as well. Their analyst meet takeaways coming in. They're pretty confident of 13% to 16% constant currency revenue growth. That's for Coforge in FY24. And Ujjivan is targeting a 30% plus CAGR of deposits over FY24 to 26. Both these stocks holding up very smartly in trade. The key buzzers today in trade, though, it's an unusual set once again. There's Indus Tower, which is holding up 3%. There's Birla Soft and Naukri, which are higher by about 3%. There's HPCL higher by 3.25%. And then REC and BPCL are a couple of your top buzzers in trade. REC, in fact, holding steadily around a 3.5% gain mark. BPCL higher by 2.25%. Then I would say sectorally, it's really IT, which is holding fort. Birla Soft from amidst the mid-caps, and Infosys, HCL Technologies, TCS, all of them holding anywhere between about 1.25% to over 2% gains coming in on the index alone. But Kunal and Naresh on the show with us as always. Kunal, for the index, I guess some more consolidation in the pipeline?
Well, yes, Aisha, I think it's a flatline day for the index, 30 points plus, 30 points minus for the Nifty, 18,600, that's the range. I think 18,570 and 630. These are the two bands for the index on the low as well as on the high on the spot levels, and that itself tends to summarize the day, that it's more restricted towards just about very few individual names which are riding on either back of some news flow or some events or some flow surrounding the stocks. But other than that, I think the only shining light today is the IT sector, and not just the large cap IT names. The mid cap IT stocks, in fact, are doing pretty well for themselves. Coforge, etc. They're looking quite charged up on the stock on the charts respectively. And more importantly, the last 1 week of selling which had happened for these IT names, I think that gets absorbed with this kind of a price action up move for these mid-cap IT names specifically. So I think that's the only encouraging sign for the markets today. But other than that, I think it's more of a flattish day for the index.
Yeah, flattish day, absolutely. And the good news also for the IT sector is today it's quite broad-based, and it's not like one stock which is, seeing that massive up move on account of the news flow. It's all the stocks which are seeing buying. So that's the positive tailwind there. But the other space which is doing quite well today is the platform and the, e-tech companies per se. Case in point being Delhivery, which is up almost 10%. You also have EaseMyTrip, which is doing well in the trading session. The ancillary coming in terms of Nazara Tech is also high by around 6 to 7%, and even Latent View for that matter. So a lot of these new age tech counters are doing well in the trading session today. And then comes the old school, your defense name. So Garden Reach is one stock which is high by 8%. Cochin Shipyard is of course reacting to that order inflow, news flow. So various pockets which are actually doing quite well in the trading session. Nuresh, before I talk to you about the banking sector, I want to quickly spot the entire these platform companies, Delhivery, a car trade, a Ease My Trip. Will you broaden your horizon, let's say, away from Zomato into these names now?
So one by one, we've seen that happening. So it started off with PB Fintech, then Paytm, Zomato. We've seen a bottoming out case in a lot of these names. So today's price action is Delhivery, which comes into that list of a consolidation and now a breakout move today. So if you look at the price action for Delhivery, that is the stock went to 300 levels a couple of times between December to March. And in the interim for the last, say from October, where it saw a big crack, the highs are closer to 385, 390. We are coming close to that. Sustaining that would indicate a short-term bottom is in place, and it could go towards 450, 480 levels. So a lot of these names are making bottoming out formations. It's the one thing is wherein one needs to pick up stocks where one is comfortable, because these are stocks which will have volatility. So Zomato was interesting, Paytm is, but not very convinced with Nykaa and Delhivery in a similar way. Delhivery would still fit, Nykaa would be a tough one, although technically seems like a short-term bounce is in play.
Okay, so short-term bounce is in play. In fact, since we're talking about Delhivery, let's take a look at the price volume action on that one, because it's seeing a breakout from 7-session consolidation. The volume 2 is almost 11 times that we have seen the 20-day average, and then it surpassed the 50-day moving average. So Delhivery is the counter, which is up almost 10%. Linde India is the other one. It's seen a breakout from the reverse head and shoulder chart pattern, surpassed the 50-day moving average on that one. Prestige Estate from the entire real estate is in the spotlight. That because the stock has hit a fresh 52-week high on an intraday basis. It's been advancing for 9th consecutive session and is trading very close to the all-time high levels as well. So that's the other stock that we are spotting. Kunal, what's your best bet coming in when it comes to the real estate vertical?
Well, I'll still go with DLF as the preferred bet from the real estate pack. Prestige is looking attractive after today's up move, because what it has done is that it's brought the stock back towards the multi-month, quarter high for itself. So and in that process, it's completed a bullish flag pattern on the daily charts. So that's an attractive proposition to trade for with the very short term. Anantraj has been something which I've been recommending consistently. I think now at 160 or 65 plus, where it's trading right now, it still looks fairly attractive. So these are the few names which looks very solid to me on the charts. Oberoi Realty and Godrej Properties, these are the two stocks which are hanging around their respective long-term moving averages. So if you manage to see some volume action over there, they could also come back into a swing trading list. But as of now, concentrating on just two names, DLF as well as Anantraj.
Right. Naresh, wanted to get your thoughts on IT. Kunal already highlighted that as I speak, Infosys is one of the top Nifty movers. It's already surging ahead of that 2% gain mark. And then, of course, there's HCL Technologies, TCS, TechM. From amidst the broader market contenders, there's also Intellect, Birlasoft, all holding fort right now. Any trading opportunity here, you think?
So what we've clearly seen over the last few months is the mid-cap and small-cap have taken leadership. Now we are seeing the larger mid-cap, larger small-cap companies taking leadership. But the heavyweights like Infosys, TCS, today is just a one-day move. The charts are yet to, give a confirmation of a trend change. Same is the case with the Wipro. The one stock which looks the most promising across the larger names is HCL Tech. Two parts to it. First, it did correct with the markets. The whole sector went from 1350 levels to 900. But in the next dip in February, March, the stock did not go back to the same lows, just like the larger cap names. And now is making a dash around that 1150 mark, 3-4 times done over the last 4-6 months. Crossing 1150 would indicate a leadership move, very similar to what happened with the mid-cap IT names. And that would open up a move all the way to 1300, 1350. So the best pick in the large cap IT space would be HCL Tech, because that's making a decent pattern. You could call it a cup and handle pattern or a range breakout. So the last range is 1000, 1050 to 1150. So minimum target price would be 1300 to 1250 in the short term. But I would go with HCL Tech as the best play in terms of risk reward as well as liquidity and the trend.
HCL Tech is the top bet coming in when you look at the large cap IT names. But which are the sectors which are likely to outperform? We pose this question to Kenneth Andrade. Listen into what his top bets are.
Okay, so our views, you go stock picking there rather than try and own financials as an asset, financials as a basket, and you will come out okay. And if it comes to metals, I think we've come through the hump of balance sheet stress that is there on commodities. So I wouldn't say metals really, but commodities. And if commodities are this solvent and throwing up this kind of cash flow, I think they've got to be valued at a very different level over a period of time. So I think that's our context of holding these two businesses on the ground.
There is the sugar rush in the entire AI space, and Nvidia is one example of what is happening to the US technology sector. What happens in US market normally translates into a trend in India and into emerging markets. Now that AI is the go-to space for everybody, chip manufacturing is the space where everybody wants to have their presence. As a fund manager in India, what is the best way an Indian can bet on this entire multi-trillion-dollar AI theme?
I think you just sit back and watch, and then in the second round pick up the companies that will survive the cycle. And that's how we look at it. We really are pressurized into catching the next big best thing, and I think that's been our strategy. So we are very old school. We do not take a risk on something that we don't know how it will emerge.
Still just so quiet on closing trades. 18,670 thereabouts is where the Nifty futures are currently, higher by roughly about 50 odd points. Key pressure points today, there's Cipla, there's Concor, Alchem Laboratories, Indigo, and then SRF, which is down about almost 3.5% as we speak. In fact, the drop for Cipla as we see it now has come in just the last few odd minutes. SRF, of course, has been lying low for a while now. There's, of course, Concor, wherein the disinvestment has got pushed back. Interglobe Aviation down about 2.6%, and then SRF as well, which is currently lower by 3.5% as we speak right now. But let's try and analyze what's been the mutual fund activity like in the month of May. What is it that they bought and sold? Sharad is here with all that data. Sharad?
Well, yes, in the month of May itself, we have taken the top 5 mutual fund houses and what the activities has been. And now we see the new HCL companies actually gaining flavor. Delhivery and Nykaa being added in SBI Mutual Fund. If you look at reductions, we have Canfin Homes as well as Bajaj Holdings. Apart from this, moving on, ICICI Pru Mutual Fund would be in focus, where the additions have been coming in, the bigger names such as NTPC, Infosys, and also in the auto ancillary space of some other Motherson. The reduction is happening in Infosys, SBI, and partly in Zomato as well. And recent buy, Mankind Pharma, is also there in the list. Now, apart from this, HDFC Mutual Fund would be in focus. And over here, we see the increased holdings coming in, ONGC, and a surprise mid-cap name coming in is RHI Magnesita, along with pharma name Cipla. Reduction, you look about it, we have IRFC, Vodafone India, and Coal India making it to the list. Apart from this, a lot of changes coming in the Nippon Life India Mutual Fund, addition coming for Zomato, CG Consumer Electricals, while reduction for Bank of Baroda and Equata Small Finance. But there are recent buys are coming in a fresh positions, especially for Gabriel India, Astra Microwave Products, and also Gateway Distriparks. Apart from this, also lastly, I'd like to point out Kotak Mahindra Mutual Fund, and over here we see the increased holdings coming in for bank names such as Bank of Baroda, HDFC Bank, and also Z Enterprises has come into this list, while reduction coming in for SBI, GAIL, and Major Reliance.
Thank you so much for putting that into perspective, the major buys and sells coming in from the top mutual fund houses. But what's the top buy and sell? Let's try and understand that with Mr. Rajesh Kothari of AlfAccurate Advisors as well. So Rajesh, that's precisely the first question. What have you been buying of late, and what have you exited, if at all anything?
Hey, hi. While I will not able to disclose what we are buying and what we are selling into, but I can tell you what basically we are bullish on in terms of the themes. And for FY24, for next 12 to 18, 24 months, we think 3 C's are going to do, reasonably well compared to the overall economy. The first C is for capital goods, So we expect that capex momentum to continue for companies which are under our universe. They have reported about 41% growth in order intake. Probably is the second consecutive year of highest growth in last 12 years. So we are very bullish on their theme, and we are holding many companies within this space. Second C stands for consumption. We expect the rural demand, which was hit adversely due to the very high inflation. I think that is going to revive as inflation is now moderating, and therefore demand will come back. And third C stands for credit growth, and we believe that credit growth, particularly industrial credit growth as well as retail credit growth, is likely to remain strong for next 2-3 years, and therefore banking and finance is the third favorite sector. So these are the three sectors on which we are bullish on, and accordingly, we are positioned in our portfolio.
Right. But Rajesh, don't you believe that banks are getting a crowded space? And if you really have to, get some alpha in your portfolio, then you really have to diversify from those concentrated names like, an ICICI Bank or an SBI for that matter.
Well, you're right. So, you need to be very selective. It is, it is always a bottom-up, once. So we have a combination of top-down and bottom-up. And so these are the three sectors from top-down perspective. And when it comes to bottom-up, if you look at our portfolio, you will realize that we have a really cherry-picked many companies within each sector, whether it is banking or whether it is consumer or whether it is a capital goods. And I think this year belongs to alpha fund managers. So bottom-up strategy will definitely deliver a reasonable alpha for the investors.
Right, interesting. Just looking at your portfolio right now, and amongst your top 5 holdings, of course, there's Infosys as well in your large cap portfolio. Wanted to understand whether after the recent decline, you've been adding more positions there. What is your view overall on IT?
Well, IT sector, we have reduced the weightage in IT sector exactly, I think, about 14 months back in month of March 2022. Earlier, we used to have a 13-14% IT weight. Most of that we reduced, 1 year back and reduced to about 7 to 8%. And from here on, we are incrementally looking at it, but we are not yet, what I would say, we still remain underweight. So that's the one sector which is under watch list, but we are still underweight. We believe that the pain may continue for some more quarters probably. Yes, stock prices have corrected, and therefore we are watching that space, and we may look at to add into it at right time in the right companies.
You might add into IT at the right time in the right names, but what about this entire new age tech vertical, your Zomato, Nykaa, Car Trade, PB FinTech of the world? Have you been buying into any of these names?
Yeah, we are holding one of the name which, so kindly please put a disclaimer because now we are going stock specific. So we are holding one name, PB FinTech, and that is rewarded us reasonably well from our initial purchase cost. And we still remain bullish on that name because it basically meets our investment criteria of 3M investment approach, market size, market share, and margin of safety. So we believe that the company being almost like oligopoly in the sector with a huge operating leverage in play, and that will result into very strong underlying growth, probably in around a 2 to 3 years time frame. So these are one name which we own, and we like this name within this kind of a new age business.
Kunal, it's been quite interesting, right? The ride from all the way close to those 40 levels to now we've almost doubled on Zomato.
Yeah, I think we've accelerated the momentum. I think last couple of weeks for Zomato from 60 levels to 74 was the first zone of big breakout for the stock. And then from 74 to now almost nearing that 80 mark for Zomato. So the volumes have inched up pretty much high post that breakout of 70 for Zomato. I think that's the inflection point for the stock price, and I think that also augurs very well in terms of the price patterns because that signifies a breakout of the swing resistance for Zomato. So which means that traders who were sitting on the sidelines waiting for the prices to break past about 70, they have started to participate post the breakout about those levels. So that generally encourages the short term as well as the medium term investor to hold on to their positions. And I'm not sure whether we're looking at a possible 3-digit mark for Zomato over the near term, but yeah, I think possibility of this uptrend to continue till at least 85-90 levels could be seen for the stock.
Rajesh, just wanted to come back, and one of the big themes which is playing out right now is energy transition and the kind of impact it will have on various verticals. And auto is right there at the forefront with the entire EV transition. And now you have the latest reports coming in that Tesla is also looking at deepening their presence in India. With respect to the EV transition and auto ancillaries, which are the top bets to play at this point of time in the stock markets?
Well, I think there are two ways to look at it. One is on the OE space. Within OE space, we believe that the current market leaders, be it two-wheeler space, or be it passenger car industry, or be it a commercial vehicle space, we believe that they will continue to remain leaders even the post, this transition, because these are the companies, they have a deep moat, whether it is in terms of available cash to reinvest into the future technologies, or it is in terms of the distribution network, and so on and so forth. So we believe that the leadership mode will continue. In auto ancillary space, you really need to be very careful, because there it's going to be clear distinction between winners and losers. There are some companies probably which may not be there after 10 years down the line. When we probably will talk again after 10 years, we'll come to know that probably 30-40% auto ancillary companies, probably they are gone out because of this EV transition. But on the other hand, there will be a basket of companies which will be able to scale up their business 2, 3, 4, 5, 10x from where we are currently. So what we do is that we look at the space where there is an opportunity to increase the content per vehicle significantly, where there is an opportunity that irrespective of whether it is a diesel, or whether it is a petrol, or whether it is a CNG, or whether it is a electric, it is a platform neutral. So there are many components, there are many sectors, for example, wiring harness, for example, rooftop, for example, airbags, for example, seats, for example, cables. There you are not going to see any disruption. So in fact, they are benefiting because of electrification of the vehicle. So we are looking at those companies which are rightly positioned to capitalize on that trends, and they are going to gain huge scale over next 3 to 5 years. So those are the few kind of companies which are into that space. We have been buying into for our portfolio.
Right. Okay, looking at some of the other names right now in trade, BP, HP, of course, are ones which are holding out very well. And then, of course, there's Adani Enterprises, Hero MotoCorp, Adani Ports, Bajaj Finance. These are also some of your other winners. But not such a great day for a Kotak Bank, for an HDFC Bank, ITC, Axis, ICICI Bank. Kunal, I think the Nifty Bank is underperforming the benchmark, isn't it?
Yeah, the last couple of days, the Nifty Bank has corrected more sharply. I think it's corrected by more than 600 points as compared to Nifty, which has corrected just about some 150 odd points over the last couple of days. So that itself tells you the underperformance of Bank Nifty. But I think that's also got to do with more of the underperformance from those large cap names. I think ICICI Bank as well as HDFC Bank, they've been big underperformers. But on the other hand, I think Axis Bank has emerged as a good breakout candidate, and it surpassed the previous resistances of 900, 925, where it spent almost a couple of weeks consolidating. So that's a big breakout candidate from the banking pack as such.
Okay, so that's the take coming in on some of the banking names. On that note, Rajesh, we let you go. Thank you so much for joining us today. And in fact, let's take the closing trade picks from our technical experts now. Naresh, what's the closing idea?
So that would be Indus Towers. The stock has been consolidating around that 160 mark for the last 3-4 sessions. A double bottom done at 135. It looks like a breakout move is possible here towards 180 levels in the short term.
What about you, Kunal? What's the closing trade that you are punching in?
I'll go with IDFC First Bank, a stock which has corrected in the last 1 week from I think 73.5 to 71, 72. Could probably make a good comeback. So I think the risk reward is also favorable to go for a long. Would suggest a buy on IDFC First Bank.
Okay, so IDFC First Bank, it's a trade that Kunal is recommending at this point of time. But on that note, slipping into a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of this trading session. Welcome back. Well, for now, the Indian market is holding on okay, and we are not alone actually. If you look at the European markets, they have opened well in the green. The DAX is up over 1%. The French CAC is up 0.9%. The pre-market rates from US are also quite positive ahead of the Fed meeting, which will start tomorrow. Of course, a lot of macro data is also lined up in sense of Indian CPI as well as the US CPI. So we are watching out for that. But ahead of that, one space which is coming under pressure is the Brent oil prices. So Brent crude has slipped almost 3% and it's now sitting below the mark of $73 when it comes to the Brent crude prices. So that's something that we are tracking at this point of time. But otherwise, not much to worry when it comes to Indian markets because we're just holding on to that 18,600 mark, and the Bank Nifty continues to underperform. Let's try and decode that with Mayuresh Joshi as well. He's joining us on the show. Mayuresh, hi, thank you so much for making time and speaking with us. I just want to go back to the point that Aisha was making earlier, that banking has become quite a bit of crowded trade. How does one distinguish their portfolio while staying in the banking space, but maybe not the usual names?
Afternoon, Aisha. Pleasure to be on your show as well. Two things. One, I think the outperformance of banks has been pretty stellar, and I think the numbers have been doing the talking for most banks. And as a consequence, I think the kind of outperformance that it has compared to the other sectors has been outstanding. Having said that, I think the kind of normalization that one now expects, specifically in terms of NIMs, as deposit rates will start inching higher, NIMs will start moderating to a certain extent from the recent highs that we've seen. And the extent to which advances growth can happen, looking at the capital adequacy for a few of the banks. So I think the well-capitalized banks, the credit deposit ratios should show significant signs of traction. You've seen significant amount of provisioning for the system as a whole. And therefore, with asset quality pressures expected to come down, the entire ecosystem probably looks better placed than most banks across the globe, and the banking financial crisis specifically in the US markets that we've probably seen. So the IDFC first is something that we continue building onto our portfolios. Our own sense in terms of the retail franchise actually picking up pace for IDFC first is a huge positive. In terms of expectations of both credit costs and cost to income ratios, they should start dwindling downwards, which should start supporting ROEs and ROAs to a large extent. With retailization happening onto their balance sheet, the obvious impact that you probably see in terms of NIMs going forward, except the next few quarters where there will be some moderation, will be relatively better as well. And even from a valuation stroke momentum perspective, as we see it on the only lens, I think it looks better placed. But at this juncture, frankly, Anisha, I think a lot of these NBFCs are probably looking very, very good. We probably hit the peak in terms of our interest rate cycle, and therefore I think the worst in terms of NIM performance should be behind us. They are taking calibrated increases in terms of protecting the spreads and margins. With collection efficiencies expected to remain high, the expectations in terms of few well-capitalized NBFCs can do well going forward as well. So I think something like a Chola, something like an L&T Holding Finance is something that we continue to like at.
Okay, we've got retail inflation as well, which is expected to cool off further after falling below the 5% mark in April. In fact, Harsh joins in to tell us what to expect.
Well, yeah, so we're expecting a number of 4.3% basis our poll, around 4.35% if I look at the average broadly. But that's the kind of number we're expecting. Let's look at May of 2022 rather. That's the base year because the number is on a year-on-year basis. So you're looking at a base year or a base period impact of 7%. So that was the number back in May of 2022. Currently at around 4.3%, quite a reasonable decline that we are seeing in CPI, below that 5% mark, second consecutive month for in a row. Now, retail CPI inflation peaked at 7.8%. So the 4.3% currently will be good for in terms of news for the consumer. The other piece also is that demand seems to be sustaining. So really, the real positive here is that CPI is coming off despite demand sustaining, which is the key positive. Of course, the RBI also has reduced its CPI projections. Q1 earlier was 5.1%, Q1 FY24 projection. Now, they've in the recent meeting, they've brought it down to 4.6%. And you will expect to see that decline come through even in the next couple of months. And play out. So hopefully that 4.6% number is met, which is the RBI expectation. Moving quickly forward, what could the risk factors be, especially the RBI looking at risk factors largely climate driven. as well as the El Nino, of course. So you're seeing possible climate-related factors which could or pose a downside risk to inflation in the future. But at the moment, 4.3% is the larger expectation for the month of May 2023 year on year.
Okay, so the good news is that inflation is cooling down, and that was quite evident by the commentary that we got from RBI Governor just last week as well. Mayuresh, this commodity price is cooling off. Do you think this could provide a further fillip to the margins of the entire FMCG companies, or do you think that's factored in the price already?
So to a large extent, I think it has been factored in, except what you're probably seeing in terms of an El Nino effect playing out on soft commodities like sugar and milk. I think how this plays out is extremely critical for these essential commodities. Obviously, I think if there is a shortage that probably comes through and there are some supply constraints which emanate, you're probably going to see the pass-through effect happen, which most FMCG companies obviously do, but that creates an impact in terms of volumes. But I think, as your colleague rightly mentioned, I think if the long period averages, even if you are close to that, I think the kind of rural demand recovery that you are probably seeing, and if that probably sustains, FMCG companies come back with a bang. But I think auto and auto ancillaries is something that comes on our sector rotation at O'Neill, and therefore I think these stocks which have continued doing well can continue doing so, in my opinion. So I think one of the sectors that can probably stand out can be auto and a few of these auto ancillary liquid companies.
Names within autos and auto ancillaries that you like?
So Maruti is clearly something that can be expected to do well. I think the longer term objectives that the management has is regaining back the market share, coming back close to that 48-50% kind of a mark. EBITDA margins should start normalizing with input costs having cooled off quite significantly. So I think the semiconductor issues largely behind, expectations in terms of more product rollouts happening over the next few quarters for Maruti, and the expectations in terms of export sales holding up, the expectations in terms of volumes actually coming back to normalization levels as well. You obviously had a few quarters where semiconductor issues, logistics issues had their own say. But our own sense at O'Neill is that Maruti probably looks good. On the two-wheeler pack, continue holding on to TVS Motor. I think strong product mix, margins around 10-11% should continue with that. And in the auto acts, I think Lumax Auto is something that can continue delivering in terms of both products that it has got, both to the combustible engine as well as to the electrical mobility.
Right. Just looking at what else has been happening in the market. Well, of course, the index sits quiet. Haven't seen much of a move from when we started off the show, and we're status quo at that 18,679 level. Tata Motors takeaways from the JLR presentation are out. The revenue target of £28 billion in FY24 and £30 billion in FY25, and the free cash flow targets of £2 billion in FY24, and continue to be significantly positive thereafter as well. So positive commentary net is what you're seeing from Tata Motors, especially JLR. They're targeting to be net cash from FY25. Kunal, you've been bullish on Tata Motors for as long as one can remember. What next after these 560 plus levels?
So now I think we can hope for the new highs. I think if I'm not wrong, the all-time high for Tata Motors is around 620 or 650, 600 approximately for the stock. So I think that should be taken out, 605 to be precise, for the stock to be taken out. But I believe that more importantly is that the stock is not yet hit its prime, in terms of the way the chart structures have shaped up, because this is now just undoing the last 3-4 years of 4-5 years of big underperformance for Tata Motors, where from I think 600 levels the stock went down to went into a correction of almost 90% to almost as much as 60-64 odd rupees, and now it's made a comeback to that 550-600 odd mark. So I believe that the big part of the uptrend is still yet to sustain for Tata Motors. I would believe that the stock can possibly in the next 2 to 3 years even go back or come back to that 4-digit mark as well.
Wow, 4 digits on Tata Motors. That's what Kunal is expecting on Tata Motors. But let's go across to my colleague Sharad, because he's been working his phones to try and understand what the buzz is like in the dealing rooms today. And there was some large trade that happened on Man Infrastructure. Sharad, tell us what's cooking in that counter.
Well, yes, what we are gathering from dealers is that in focus we are having Man Infra and European FI is heard to have bought stake in the company, and the important thing is roughly 51 lakh shares have exchanged hands via block trades, and almost 1.5% equity has exchanged hands. Now the seller remains unknown, and we'll get you those details post the market hours. And importantly, there are important investors such as Swan Mutual Fund and Rekha Rakesh Jhunjhunwala invested in the company itself. Now looking at the stock performance, it's up almost 60% from March lows and currently coming at almost 14-month high levels. Now the stock specific news, if you talk about it, the recent news flow has been that the company is going to develop a luxury residential project in Ghatkopar region of the MMR space. Now the important thing is the company expects a revenue potential of roughly 1200 crore rupees over the next 4 years from the phase. And also the company stated that there was a significant secured debt reduction of almost roughly 313 crore rupees over the last 1 year itself. And the management commentary has been bullish for the EPC segment business and also going for an asset light business model in the residential space in the Mumbai metropolitan region.
Okay, that's the take coming in on Man Infra. Meantime, Interglobe Aviation is getting hammered amidst reports that the Gangwal family could offload about 5 to 8% stake in Interglobe Aviation. That's Indigo, of course. That is what some of the reports seem to be indicating. Remember, Rakesh Gangwal, who is one of the co-founders, had quit the board of the company back in 2022 after a fallout with the fellow founder, that's Rakesh Bhatia. And as of March end, the Gangwal family held about 16.2% stake in the airline. So it seems that they're going to ease off a little bit over there. From the current 16.2%, they may come down, or rather may sell about 5 to 8% stake. And you are seeing the stock a little bit under pressure, down about almost 2% as we speak right now. But Mayuresh, in continuation with the entire manufacturing theme, where else are you placing your bets? Any newer avenues you think which have opened up of late?
So yes, Aisha, I think the entire mid-infra stroke capital goods space still looks very, very interesting because earnings have still held up. I mean, if you look at the sequential numbers that these companies have been reporting have been exceptional. A, order wins have been extremely strong. B, the new orders that have come through are with better margins. C, the execution timelines have improved vastly, which means that a huge amount of operating leverage gets played onto their balance sheets, and that ultimately gets reflected in their ROCs and ROICs as well. Now, with such strong expectations in terms of a good order book and strong revenue visibility and operating leverage playing out, I think the earnings growth that we look at O'Neill of 20-25% can easily be achievable for most companies within the space as well. So I think within the larger mid caps, ABB India is something that we continue holding on our global focus lists. Strong numbers, expect outperformance in terms of earnings delivery to continue. But a couple of stocks within the mid-cap universe. One, ITD Cementation with management has been very, very bullish. They expect 7,000 crores in terms of revenues from 5,000 crores, a jump of almost 35-40% odd. Margins should jump from 9.5 to almost 10.5, 11 odd%, expecting 8,000 crores in terms of orders on the existing 20,000 orders that they're probably sitting on. The risk factor in terms of their exposure to the Adani Group, I think timely servicing is absolutely happening, both in terms of quarterly as well as annualized payments as well. So this is one stock which is very, very interesting from this space. And the other one is AIA Engineering. Obviously, the volume growth has been reasonable in the quarter gone by. Margins are a tad bit on the higher side. They should normalize going forward. But even with 25-26% odd margins, capacity is expected to go to around 520,000 tons per annum. Expectations in terms of a very strong order book at around 800 crores, more orders expected to come their way, and absolute expectations in terms of earnings to again exceed 20-25 odd%, with very minimal leverage onto their balance sheets, leading to better ROEs. So a very interesting space, Aisha. I think ITD and AIA is something that we continue liking.
ABB, ITD Cementation and AIA Engineering, these are the stocks that you're recommending at this point of time. But Mayuresh, what about the entire real estate pack? And would you rather play directly through real estate names, or would you probably look at cement or building material counters?
So I think the right strategy, Atisha, is that a few of these players have done exceptionally well, and numbers have been extremely strong. I mean, if you go and read through management commentaries right into Q4 and where we are now resting in terms of the peak of the rate cycles, DLF obviously has been a huge outperformer as far as the entire space has been concerned. A few of these South-based players, including the likes of Soba and Prestige, have delivered a good set of annualized numbers as well. And again, I think the kind of demand that comes through specifically from IT professionals for these South-based companies still looks extremely robust and strong. So I think a few of these companies can definitely be kept on the radar. But you're absolutely right. I think the real estate ancillary space is something that can also be looked at. What we're probably expected to see in terms of good growth, expected to come through, is something that can be played out. Obviously, a couple of stocks that we continue holding on our global focus lists are stocks like a KEI, stroke Polycab. I think wires as a space expected to continue doing well in our opinion. Input cost deflation will play out very, very positively in terms of margins as well. And therefore, I think these stocks can definitely be kept on the radar. And let's not forget painting companies. I think in the second half, I think with the demand expected to come back very, very strongly, specifically repainting demand, I think that can have a huge impetus in terms of volumes. Crude prices coming off, crude derivatives coming off as well, will mean margins should remain extremely stable for these companies. And these companies throw humongous amount of cash. I think the free cash flows are extremely strong as well. So yeah, I think a few cement players, including the likes of Ultratech, should continue doing well. A few of these cable stroke paint companies can also continue to do well.
Just wanted to flag out a couple of counters which are buzzing. Look at a Sheela Foams. It was already high by 6-7% throughout the trading session, but it's now piling on to more gains. So 13% higher as far as Sheela Foam is concerned. You also have Garden Reach, which continues the up move, and Quest Corp too is spiking a bit. On the losing side, Zomato has lost the steam, so that's now down to the levels of around 77 thereabouts. Kunal, do you track this one, Sheela Foam at all, and anything on the charts that you'd want to recommend?
No, nothing exciting on the charts. I think after months of correction, the stock is finally showing signs of revival. But again, not enough confirmation that the major downtrend is reversed for Sheela Foams. Yes, there could be just about a base building process which could probably have happened for the stock. I think 1,020,000 has been the lows the stock has tested twice. Currently, it's at 1170 mark. But the previous two resistances, the first one was at 1980 levels, and the second one was closer to 1650, 1680 mark. Those two are major resistances at play for Sheela Foam. So I think the stock would take a lot of time to try and make a comeback to those kind of levels. But yeah, I think from a short-term basis, this kind of a move just about reinstates that the near-term bottom could be in place.
Okay, that's a couple of these buzzing names right now in trade. You've got Alchem, Concor, HAL. These are all stocks which are actually seeing a bit of an ease down. Pharma is definitely underperforming. I think that after that export data, wherein you saw quite a bit of dip coming in from most of these pharma majors, pharma has been a rank underperformer. Banks, like we highlighted, even cap goods led by L&T is not doing a whole lot today. FMCG, power, cement, these are all lagging sectors. Technology, of course, is holding out well, and even telecom and oil and gas is looking smart. Idea has seen another 2% off a spurt, and remember last week was a great one for Idea. Indus Tower has been going very steady, almost a 4% move here. Bharti holding up 0.5%, and Taracom is the other winner, about a 0.5% uptick coming in over there as well. Mayuresh, what is the best way to approach the telecom story?
So I think it's a wait and watch, Aisha, very frankly, at this point of time. I think a couple of reasons. One, I think the data is highly consolidated at this point of time. I think most of the telecom players have weeded their low pricing plans and have migrated a lot of their users to the higher plans itself. The key trigger for these stocks are obviously going to be price hikes now, because I think they need to mitigate two aspects with price hikes. One, I think the kind of capex that they've got around 5G, both the bidding that they've probably done and the ecosystem needed to build 5G as a pan-India presence as well, and two existing spectrum auctions that still need to get serviced. So to a large extent, I think the trigger point in terms of ARPU increases, which should be consistent over the next few months, is something that can be a driving force for most companies within this space itself. Obviously, I think to the likes of a Jio and an Airtel, I think the subscriber base has been pretty large. They are obviously migrating a lot more customers from Vodafone Idea at this juncture. But I think the sole resting point remains ARPU increases, based on which I think the overall growth in terms of numbers can get reflected. Unless ARPU increases happen, my own sense is that it will not get reflected substantially in terms of bottom line growth. So I think a wait and watch for the sector as well.
Okay, wait and watch for that sector. But is it a wait and watch for the power sector as well, Mayuresh? Because things are looking incrementally better. But of course, we have seen multiple false start for this sector. Would you look at it seriously now?
So we did hold a few companies in our portfolios. I think we have done some element in terms of reaching our targets and therefore recommending investors to probably get out. A clear compliance disclosure will be stocks like DFC and PowerNet. So to a large extent, I think the entire story is now getting largely crowded at this juncture. Numbers are expected to be better in terms of peak power demand that we probably hit. And therefore, power consumption as a space should continue doing well, even in the next few months. Having said that, the base these companies are working on is also a very heavy base, and therefore the outperformance that we look at it from this juncture onwards is going to be a tall task for these companies. So I think only the outliers in terms of exceeding market expectations and earning expectations can continue doing well. But to a large extent, I think valuations and both price action are largely getting priced in for a whole host of stocks within the space.
Okay, just looking at some of the other than active movers in trade, and we've been highlighting as to how you're seeing a big breakout on a Delhivery, on a Linde India, and Prestige Estates, which is sitting at a 52-week high intraday in any case, and that's managed to cross its 50 DMA as well. Kunal, let's revisit Realty, because now you're seeing newer names, join in that breakout pack.
Well, yeah, I think Prestige is the one which looks attractive at current levels as a fresh bet. The stock has confirmed a flag pattern breakout, so looks attractive in terms of a medium to long-term bet. Even the likes of Godrej Properties and Oberoi Realty, these stocks are also looking quite strong for themselves. So Oberoi Realty is the one which has managed to confirm a breakout of its 200 DMA. Godrej Properties is just about in process of confirming a breakout above its 200 DMA, as well as a breakout of its previous swing resistances. So I would wait out for a confirmation of Godrej Properties, because the stock was one of the first ones to correct in 2021. I think from 2000 to 2100, which was the high for Godrej Properties, the stock had corrected very sharply. So maybe this could be just the first process of mean reversion for Godrej Properties, and then we can probably expect the trend to continue. But then as of now, I think DLF, Prestige is something which looks attractive, and possibly even Oberoi Realty.
DLF, Prestige, Oberoi Realty and Anantraj, these are the stocks that Kunal has been positive on. But Naresh, what's the BTSC idea that you are recommending at this point of time?
So first is a buy on Indus Towers. The stock has given a breakout on early charts, also good momentum senior. Stop loss at 160, target of 170 plus. Second is a buy on BPCL, giving a short-term breakout, and the whole OMC pack looks interesting. Stop loss at 364 and the target price of 375.
At you, the BTSC trades?
So the first one is a buy on NTPC. The stock looks attractive for a target of 192, stop loss at 182. And the second is AB Capital. After quite some time, the stock has made a comeback. Closer to 175, 76 at current levels, would suggest a buy. Targets of 182, stop loss at 172.
Okay, that's the take coming in on some of those BTST trades. Haven't done anything actually, just about 54 points of an uptick is what we've seen in trade. And I just want to mark what the global markets have been up to, because they're a tad bit better than us. While of course the US futures are languishing right now and are absolutely quiet, the S&P futures higher, just bias mid, similar is the price action for the Dow futures. It is the Nasdaq which is taking the lead with almost about a 0.5% gain, and we're pretty much, reciprocating that. Technology is the only winner, so to speak, amidst our markets as well. Asia also has been all over the place. Japan saw an uptick of about 0.5%. Korea, though, was down. Flat for Hong Kong and just marginally in the green for Australia as well. Europe, though, has started off a lot better. DAX is holding up a good 1% in the green. It's a 140-point gain that index is sitting on. CAC is holding up about 1%, and FTSE MIB as well is seeing a very strong 1% gain. It is some of the some of the markets ahead of the central bank meeting, the ECB that is, which are looking buoyant. UBS is holding up almost about 1% after completing that Credit Suisse acquisition or takeover rather. So these are a couple of highlights coming in from the global markets. For us, it's really been all about IT today and telecom. They are the ones which have actually held out. So everything from a Persistent, which is closing in with a 2% gain, LTIM, which is held out by about 2.25%. Coforge has seen a smart move, almost a 2%, 2.5% move coming in there. Naukri has held out by about 3.5%. Intellect held out by 3.7%. Birlasoft has come in higher by about 3%. Techem, HCL, Infosys, Infosys, TCS, LTTS, they've all been a pack of winners. I think Wipro has really been the only eyesore today amidst the technology pack at least, which closes in with a 0.5% loss. Amidst the large caps, it's been Cipla, L&T, Maruti, along with Titan, which have been the laggards. And of course, there's been HDFC Bank, ICICI Bank, Axis Bank, SBI, which have really done nothing in trade. In fact, so to speak, they've underperformed what the benchmark index has done. IDFC First and RBL, of course, along with Can Bank, have seen some recent moves. You could add perhaps a BOB as well to that pack. These stocks have managed to see almost about 1.5% kind of gains. In fact, RBL almost nudged a 2% gain as well in today's trading session. That said, it's the OMCs also which have shown some leadership. So HPBP, both those stocks have held out very well. HPCL saw a dash of about almost 4.5%. BPCL held out by 3.5%. But on the losing side, there was also a Power Grid, there was Concor, Interglobe Aviation, which fell 2% on closing, Alchem, which lost 2.25%, and then SRF as well, which has managed a drag of about almost 3.5%. Well, that's it then. Another day of consolidation goes by. Let's see how we pan out tomorrow. For now, it's a goodbye in this edition of Closing Trade.